Can I start?
Yeah, good morning, good day, everybody. This is FXStreet. I am Mauricio Carrillo. I am here with Dr. Sivaraman. We are starting our Federal Reserve meeting, monetary policy meeting, live coverage. There is a low possibility that the Federal Reserve will decide to rise interest rate, but in any case, that is the only question that we will have to check. In any case, Janet Yellen will, in that case, Janet Yellen will call for a quick conference press to facilitate the news, the new statement and the new behavior. Right now we are with Dr. Sivaraman. So good morning, doctor.
Yeah,
How are you?
Oh, I'm fine. Good morning, Mauricio.
Okay, so is it your time right now?
Yeah, I can start. So hope
Yes.
people are here to listen. Okay. Good day to one and all. Good day, Mauricio. Good day to everyone. So I'm going to give the spike trade call for the FOMC rate decision time. So earlier I had given the spike trade call before that of the ECB press conference, and I was giving the call that Euro and GBP are expected to make a big drop after that of the ECB press conference. And now we are on Wednesday, 28th of October, and between 17:30 and 17:45 GMT, I'll give the live market analysis and give the spike trade recommendation. So first of all, let me do the live market analysis using the forecast and also the market reading technique. Then later on, I'll explain to you what call we can think of. So the forecast says, I have given it on Monday, 26th of October, the expected market moves for the entire week. And there you can find that today, 28th of October, they are expected to make the swing and slide during that of the Japanese and the European session, and then swing and rise during that of the US session. So you have come across nominal rise in the case of Euro and a subdued rise in the case of GBP. And 18 GMT, FOMC rate decision is going to be there, and also the statement. So what the Euro and GBP are expected to make? They are expected to make a small, quick false dip before that of the FOMC rate decision time, that is 18 GMT. From 17:55 GMT, they could suddenly make a dip pretending as if there is going to be a drop. You know very well, the players do the false move before that of the intentional upward spike or the downward spike. So they are expected to make the false dip before that of the 18 GMT. Then afterwards, an upward spike in the case of Euro and GBP are expected. Now let us do the analysis with the help of the live market quote page. There you can see that Euro is in positive net change. GBP is also in positive net change. Besides, USD is also in positive net change. So you can understand that they intend to make a contrarian move after that of the FOMC rate decision time. So what they are expected to do, gain the levels in the case of Euro and GBP, and also in the case of USDM. As a result, you will come across US dollar index may not have much of an impact, because Euro and GBP might give the negative impact on the US dollar index, but USDN is expected to give the positive impact on that of the US dollar index. And also, which is envisaged or which is evidential now, if you look into the moves of the commodity pairs, both USD CAD as well as Australian dollar in negative net change, which also confirms that they intend to make a contrarian move. So you may not be able to see in all the currencies US dollar weakening move. You will come across the US dollar weakening as well as US dollar gaining moves depending upon the currency pairs. So let me give the initial lows and the highs which are being derived by 3:30 GMT today. And in the case of Euro, The low was 1.1025 and they are not still breached from the start of the Japanese session. The high was 1.1079. They breached it and went up to 1.1095, indicate that they intend to make a rise. And also in the case of GBP, 1.5299 was the low. They made a brief downward stop into 1.5277 and come above this during the early part of the US session, and they are still holding above that of the initial high. So they are holding above that of the initial high in the case of Euro and GBP. Still, they will try to pretend by making a quick dip for about 2-3 pips. Sometimes they can do it for 10 to 20 pips. So you have to watch carefully and quickly take the position exactly before the announcement. So there comes your skill set, and you should not be afraid. You should not wait for the market to settle and find out how they are going to read the statement, how they are going to incorporate the moves depending upon the decisions. And finally, if you try to enter into the market, market might become subdued or already made the moves. And if you try to jump into the running bus, probably it may halt. So keep in mind that we have to identify such spike trade potencies and try to take the positions so that we will be able to really capture a good profit. And in the case of USD yen, you find that 120.55 is the high, and they are holding around that. Probably they will make a small dip, pretend as if they are going to drop, but the net change is positive, so they may come down to 120.45 or 43 and then start gaining the level. And in the case of CHF, already they gained the levels. From the gained level, they made the drop. Probably they could make a sideways move without making much of a drop in the case of USD CHF when they are gaining the levels in the case of Euro and GBP and USD yen. As a result, you will come across CHF crosses will also make such upward move. Then in the case of USD CAD, from that of the initial low 1.3263, they made a massive drop to 1.3091, and you know the commodity pairs lead the rally and lag behind. So here you come across the commodity pair has already started making the USD weakening move. And in the case of Australian dollar, they made a quick downward move during that of the CPI announcement, and then subsequently started gaining the levels, and they are expected to spike and go above that of the initial high. So this is what you come across with the help of the market reading. So we will see what sort of trades we can do. Okay. Now wait for a small dip in the case of Euro. Probably they could make about 20 pips dip, or sometime they may make only about 5-10 pips. So exactly 1756 to 59. You watch how exactly they are making the false move. If it is a false move on the downside, then you immediately buy. If it is a false move on the upside, then wait. They will just make a small firm up, and then during that of the statement, they will make a dip and then rise during that of the rest of the US session. So try to wait when they are making a small dip, but they are not going to make a big drop. But still, you have to always expect the unexpected. So try to keep the hedge order to limit the risk 30 pips away from the other buy position. So it will be a lower level sell stop, and then keep the take profit order about 100 to 150 pips. And you can use, once the position makes profit, keep stop at entry, and then trail the stop in a profit making position, and also trail the take profit order on the upside when they are making the upward move, and they will make volatile moves, and try to see that you are keeping 30-35 pips away from the other market so that they may not give a fill, and then you will be able to maximize the profit. So it is not the question of taking a right entry decision. You should also in a position to fearlessly maximize the profit. So if you want to do a fearless trade, then the best thing is you have to use the trailing stop in the profit making position. In the event if the market reverses suddenly, you will be seeing that you will position is closed with a minimum profit. So that you should to understand. So keep in mind that now in the case of GBP, around the current level 53.25, you can take a buy and 100 pips hedge order, I mean 100 pips take profit order, and then you can keep 30 pips below the hedge order to limit the risk. And in the case of yen, you can keep a small buy at the lower level, 120.35 area, probably about 5 to 10 pips. They can make a dip, and then they will spike up. And also, you will come across towards close of the US session, there will be some profit booking on the at the higher level before making further rise. So when they are making a quick upward move during that of the late US session, you try to book the profit, and later on when they are making a downward move to make some profit booking or induce those who are entered late at the higher level after the rise, the buy position, to liquidate the long positions. So they will try to trap the traders. So keep that in mind, that the players are here to trap the traders, and such events like FOMC, rate decision times, etc., they are all considered as the market hype time. So they are known to trap the traders either way. That is why many of the analysts say that you wait for the market to settle down, then you enter into the market. But the thing is, once you wait for the market to settle down, you may get about 10 to 15 pips or 25 pips swing trade opportunities. But the great spikes, you should be able to capture. So that is what I'm trying to give it, and use the trading strategy to limit the risk so that the market fear is not there to while you are handling the positions. Then you will be able to find that trading is a great opportunity. So if you've got any questions, you can ask the questions in the chat window. I'll be willing to answer to that of the. Okay, can we see the strategy of the demo during that of the announcement? Oh, okay. During that of the announcement, you want me to stay because there are going to be other speakers. So, and actually, I am talking from India. It is late night for me, so you should accept then when I complete the webinar in another about 5-10 minutes, and then be as a spectator. Anyhow, you can watch how exactly the trades are. Probably during that of the next spike trade recommendation time, probably during that of the non-farm payroll, I will try to be online and try to show how exactly we can handle the situations. Thank you for your suggestion. So is there any other question?
Well, Doctor, we have a question. Valeria is with us right now.
Okay.
So, hi, Valeria. Valeria, do you have any question?
Valeria, how are you?
Hi, Doctor. How are you? How, Mauricio? Hi, Yohay. It's great to be here with all of you guys. I hear a bit of echo of my voice, but I believe it's okay. Hi, Yohay.
Hi, guys.
Hello.
Good to be here.
Yeah.
I was thinking to ask the doctor if he has any clue of what the Fed may do today. Are we going to hear something about rate hikes or not? What's your take?
Yeah, there will not be any change as far as the rate hike is concerned. They will not increase, but the market will say that it gives the other measures to gain the levels. So that is what they will give an interpretation. I will not be able to give an exact comment what is going to happen, but I can tell you what is going to happen to that of the market. Euro and GBP are expected to make an upward spike. And ECB also, I have given the call that there will be a big drop after that of the ECB press conference. Probably you would have seen that has happened. So this is based on my forecast algorithm. So I will not be able to comment on the actual fundamentals. We'll be able to appreciate.
Okay, Doctor.
Okay.
Thank you very much for your time and for your help. I think we will start with the second part of the live coverage. Thank you for your time.
Thank you, Mauricio. Thank you, one and all. Bye.
Bye-bye. So, everybody, hello, Yohay. Hello, Valeria. So, what is your take? There is a little is a pretty low possibility that the Federal Reserve will decide to move on today. But what do you think, Yohay?
Zero chance, no action. Everything depends on the statement. If they acknowledge the weakness in the economy in the way that hints that there will be no rate hike in December, that's of course dollar negative. But if they do acknowledge some weakness like in the NFP, but keep the ship sailing, I think it'll be relatively dollar positive. All in all the eyes are on December, and this is the first hint for December, and then we'll get lots of Fed speakers during November and early December when we have Janet Yellen speaking. So the focus is on December.
What do you think, Valeria?
Oh, I pretty much agree with what Yohay has just said. I believe that the Fed is not willing to announce much today because they have not been willing to give any clues all through the year, right? So I'm not expecting big news today. And of course, there are two probable scenarios. Either they came out with another dovish stance and with no clear about the date, which may be a bit negative for the greenback, or they can actually be really negative, and that will make the market believe that we're going to have a rate hike next year, right? So that should be pretty negative for the greenback, at least for today. Of course, there's a third scenario in which they give clear clues about rising rates next December, but I'm not expecting that. But if that happens, I do believe that the greenback can gain pretty strongly across the board, particularly against the euro, which has already been hit by the ECB and the People Bank of China, right?
Yeah, I certainly agree also with that. Regarding the euro, I think that Draghi proved he's the dovish of them all with last week's huge performance. Negative deposit rates are on the cards, more QE now, more QE in the future. Extreme worries, so I also see that euro-dollar is vulnerable. The Fed has to be really extremely dovish in order for the euro to rise. We're seeing euro 110.70 is sort of a battle line, 111.30 is the line I see to the top side, and 110 to the downside. Regarding expectations, these are the implied, what you see now on the screen, are implied probabilities. In October, we're expecting, well, 95% no hike, but December it's now 62% for a hike. 62% against the hike according to bond markets. So bond markets are not expecting a hike, but if you ask economists, it's the opposite picture. It's 65% thinking there is going to be a hike.
Okay, that is very interesting. So no rise today. This is, as you say before, Yohay, that is completely out of the table. But in the case,
it will be a shocker. At least we're going to have some fun.
Yeah. Well, Janet Yellen said that in the case the Fed decides to move on, she will call for a quick press conference. So otherwise, it will be a really quiet meeting.
Right? She said that in February, that they could raise rates in any meeting, including the ones that had not press conference schedule, and that they will, in that case, right, do a quick press conference. Anyway, I don't know. I do believe that they had their chance in September and they let it go, right? So there's no need to run to raise rates in October. They still have December and the market believes it. And stock seems to be coming out of their negative momentum we've seen the previous month. So I have a strong feeling that the Fed would like to see better stability in the stocks market. They don't want to be the one pumping the bubble. So I don't know. My take is that we are not going to see much action right now. From the Fed, I mean, right? We can see some action in the market anyway. What I'm pretty surprised today is the strong recovery we have seen in commodities ahead of the meeting, right? We have oil rallying, gold rallying. It advanced 1180 even before the news. And oil, despite stockpiles in the US keep mounting and rising and at 80 years highs. We are seeing crude adding over $4 today. No, $2. Sorry, but yeah, still, I think it's too much. Too much
I
of a
agree.
rise.
It's totally unjustified.
Yeah, there's not much behind those moves, right?
No, oil, there is just not enough room in inventories, so oil is going to be floating around. The Iranians are coming online. OPEC
Excuse
and
me.
non-OPEC countries are unable to agree on cutting production. I see all the reasons to sell oil, and this isn't happening. So this must be some kind of option, magic tricks, profit-taking, things like that. I don't see a good reason for these moves.
Why we have such rally ahead of the news. Anyway, anything can happen in the next 15 minutes, right?
Yeah, it depends a lot on
10 minutes.
analysis. So.
Well, there is a question. The JM in the chat is asking how much do you guys think the initial dip will go down? How deep it will be in the euro dollar?
It will depend on the tone, of course, right? The pair has an immediate support. Let me share my charts a second. There we are. Of course, it will depend on the news, but the pair has been pretty much coming back to 1050, right? That's the level that the pair has been consolidating around all through the week so far. So if we have really good news for the greenback, we can see a retest of the 110 lows, the 995 we tested on Friday, right? But I'm not seeing much of a downward potential unless we break below that level and trigger some stops, and then we can go back down to 960. Sorry. And on the other hand, on 1080, we have some resistance, but I believe that it is 1120, right? It has been a huge midterm. It has been a huge short resistance. It has been a breakout point for the past few months. So my take is that only if we manage to get above this level, we can continue advancing, maybe up to 1160, maybe up to 112. But still, I believe that any kind of spikes of such nature in the dollar will be more interesting as a selling at highs than trying to buy and catch up the rallies.
Okay, thank you, Valeria. Well, just to make a recap, we are FXStreet. We are in the Federal Reserve interest rate decision in the monetary policy decision. I am Mauricio Carrillo. I'm here with Valeria Bednarik from Buenos Aires, Yohay Elam from Barcelona, and right now Dale Pinkert from San Diego. Hi, Dale. How are you?
Hey Mauricio, how are you? How you doing, Val, Yohay? How's everyone doing today? Happy Fed Day.
Yeah, thank you, Dale. I am. It's the really pretty morning in Tokyo, but it's okay. I'm here with us. Yeah.
Okay. So I was listening to you guys, and great coverage. And I have to ask myself, is the Fed writing strangles? Because every time the equity market's under pressure, they speak like doves. And I suspect that even though they're going to do nothing, they're going to sound more hawkish today in the statement. And the reason is this: S&Ps. Okay? S&Ps have rallied 150 handles or so in the last 2 weeks since the NFP. So financial market conditions, I think, are very important to the Fed. And they can now talk more hawkish, and people will put December back on the table. So that's what I think is going to happen here. So perhaps initially we get a dollar sell-off, and then I think the dollar comes back.
Actually, so do you expect a bullish, a hawkish statement from the Fed?
Yeah, I think they're going to be hawkish, and all you have to do is pull up your S&P chart or look at the China market, and they were worried about China, they worried about emerging markets, they were worried about 1850 S&Ps, Mauricio. So here we are at 2080, 2090. Now they have the chance to sound more hawkish, because perhaps what they want is a stable market, maybe not one blowing off and not one
Yeah.
collapsing, and they actually manage it with Fed speak. And that's why I think with the market doing what it's done since the NFP, that the statement will be a bit more hawkish than most are looking for.
I see. But do you remember that interview that you do with, that you did, sorry, with Ashraf lady that he told about that
Yeah.
spike and then it's a completely meltdown? What do you think
Right.
about that? It's perhaps just
I
a
think that
falling
we're,
really.
well, I think we're still, you know, Ashraf was painting the picture for a correction in the S&P, a lower U.S. dollar yen. He did bring up 2065, 2075 could happen before this, so here we are. To me, it looks like yields are probably still, until the S&Ps are done, heading up. I think he capped the 10-year yield at about 2.25, was the highest it was going to go before we went to, what was his number, 1.4, 1.37 for long-term yields, 10-year yields into the spring.
138.
So I still think Ashraf has the possibility of being right.
I see. Okay, thank you, Dave.
But that's going to be a big risk-off trade. Big risk-off trade. I'm not sure if the risk-off trade is going to be bearish or bullish the dollar. My bet is that's not a real bullish environment, at least for U.S. dollar yen, if we're going to have that kind of yield, or for the S&Ps. So perhaps we're in this zone. Actually, someone else I interview who does astronomical work was looking for a turning point, Norm Winsky, right around here, the 28th. So I'm thinking that we have some type of peak in the S&Ps around 2100. And I'm not talking about a crash, but we've rallied from 1850 to 2100. Why can't we pull back halfway? So that's what's on my mind going into the Fed.
I see. Thank you, Dale. Back to the forex. There is a question from Valeria here in the chat. Valeria, what is the best pair to trade right now? The sterling, the pound, or the euro?
I do believe that it will depend on the kind of outcome we have from the meeting, right? If the news is dollar positive, I do believe that both the euro and the pound can ease, right? But I'm taking my chances that a hawkish Fed and a dollar rally will maybe stronger against the euro, which it's already done by the ECB words, right? In the pound, what I fear is that the initial spike lower, if it happens, right, will quickly reverse, because keep in mind that we are still believing that the Bank of England will be the next rising rates, right? So that's why it's keeping pound higher and unable to break down despite the recent dollar strength we have seen across the board, right? So that's my personal take. But I will be looking particularly at the Aussie because it was hit badly, right, by poor inflation in Australia. So that's my take. Anyway, keep in mind that we are about to hear the news, and you're going to hear it with a bit of delay from us. We have 30 seconds, what minute late. But while you are going to see the reaction in the charts, right, you will see the initial reaction.
Yeah, let's put on the charts, 30 seconds.
Yeah, a few seconds ago. And the market is already nervous.
Yeah. Let's see if we get a stronger dollar.
Yeah, I will type the result in the chat, so you will see in real time the number.
Euro dollar falling 50 pips.
No.
I guess there's.
We're about to test 110.
110, yeah, stronger dollar.
The market is very nervous.
Okay, they left rates on hold, right?
Yeah.
Rates have not been changed, so.
It must be a hawkish statement to get this reaction initially.
Yeah, I'm looking for the headlines.
So
sorry,
rates unchanged.
Take a look at gold. It lost. Gold
Okay,
goes.
here's the statement. Let's trade the sectors.
breaking below 110 in 3, 2, 1. And
almost there, but no cigar. Yeah.
Oh, 2 pips.
Yeah. Just a little push, and it'll collapse. Okay.
It will collapse. It will break. The trigger drops if it does. Anyway, gold lost almost $12 with the news. So actually, it has to be a quite either a quite hawkish statement or a quite wild market reaction from algos. We are going to see it in a few seconds.
The pace of job gains slowed and the unemployment rate held steady. Nonetheless, labor market indicators on balance show that underutilization of labor resources has diminished since early this year. So they do acknowledge weakness in jobs, but it's not that bad.
Yeah.
So that's what Bill was, I guess, talking about being a bit more hawkish.
Yeah, and I like the spike action in the pound took out the U.S. session low by a few pips.
Under 110.
Yeah. 152.58 is 61.8 back, so that's the area I'm monitoring in pound dollar.
Yeah, 52.50 is a strong static support level for me, so I'm with you there, Dale. I believe that's the level to watch.
And the hawkish report is going to set up, I think we've had the top in Canada for now, and I think you have to look to sell rallies right around 132.10, 32.20, wrong over the highs of 70. And then, so this was a pretty nice break in Canada, and like you said, Bill, nice pop in crude. So I think this could be a shorting opportunity coming here.
Yeah, there we are. The euro has.
Oh, quite nice.
Stock market's not making a lot of hay out of it.
Not much, honestly. The Aussie has breakthrough the previous low, and it's challenging the 71 level. The euro has extended below 110, so we're going to 90 now, which is the next support. And okay, there we are. Okay,
regarding inflation, also the same sort of stance. Yeah, it's a bit weaker, but not that bad. Inflation has continued to run below the committee's longer-run objective, partly reflecting declines in energy prices and pricing of non-energy imports. Market-based measures of inflation compensation moved slightly lower. Survey-based measures of longer-term inflation expectations have remained stable, and that's the key point, I guess, for markets. The Fed is not being rocked, is not trying to rock the boat because it's not being rocked by the data.
Yeah, less concerned about global developments, right?
Yeah, they removed that line. They are not concerned on global economy anymore. Well, they are, but not in that.
They're not worried about China anymore, at least not their markets. But you know what I'm worried about? Us sending ships to islands that the Chinese have built. I'm a little concerned about that.
Everybody needs an external enemy, no, to divert attention.
Well, Yohay, I'd rather be your friend than adversary.
Yeah.
You too, Val.
Yeah.
And especially
international relations, I guess. Yeah.
Yeah, you Dale didn't tell anything about me, so I am your new enemy.
You are an old enemy.
The enemy of my enemy is my friend.
Oh, yeah.
I see.
Okay, so pound holding, EG going lower. Nice looking board.
Yeah, we have action from
one, but it looks stronger than that.
Yeah.
What do you guys think on this yen move? My platform's freezing. Yeah, we're getting a pretty.
I think it's
we're getting
justified.
a pretty good fade, and we're getting a good fade in the S&P. So the Fed wrote calls before the Fed announcement. They sold puts after the NFP, and they sold calls today. Strangles.
I think regarding dollar yen, the rise is justified not only because the Fed was relatively hawkish, because of all the things we said, but because we have a Bank of Japan decision on Friday morning, morning here in Europe, and the recent comment from the Japanese government was that there is a chance for action from the Bank of Japan, contrary to previous comments. probably
Yeah.
because of what happened, what Draghi did and what happened in China, the rate cut. So I think the yen is a bit more vulnerable than it used to be, a bit less hugging the 120 level, maybe falling out of love with 120.
Maybe they need
love story.
Maybe they need to clear out the stops over 2078, 2170, Yohay.
Yeah, somebody's
Yeah.
stop
I mean,
hunting.
anyone who's still short the yen, that's their last hope that that high holds.
Yeah.
I
U.S.
don't know.
economy's been sorry.
No, it's okay. I was thinking that the dollar Japanese yen, it's maybe the less attractive trade today. And I'm even considering that whatever happens right now, it may return to that 2040, 2050 level, which seems to be its comfort zone ahead of the Bank of Japan, meeting on early Friday, right? So I'm like taking it aside today. And what I have been seeing lately that here has been this the brown moving average, the 200 simple moving average in daily chart, right?
Yeah.
Yeah, and it has been containing the pair ever since late August, early September. So that's the level we need to clear those highs in that region to talk about bullish continuation in here. In the meantime, it's poor noise, right? Okay, there we are, 960 in the euro.
Quite a strong
Break
move.
off. Yeah, I don't expect much more of continuation right now because pair has lost over 100 pips in a few minutes. We may see some pullbacks, some consolidation. But as long as we remain below 110, it's pretty bearish and we can extend early Asia. Take a look at the Swiss, it's making fresh highs. So that should drive the euro lower also.
I see support at for euro dollar 109.50, but the really strong support is at 108.10, which was the post-recovery low. In any case, we're seeing a dollar sweep. Sorry.
No, go ahead. Sorry for interrupting.
The pound just hit that. Pound just hit that. Came within a few pips of that 61.8 at 52.58.
The pound.
Yeah. So it took a big break in euro just to take the pound back down to the U.S. lows. To me, that's a sign of inherent strength.
Yeah.
So if the pound's not getting hammered when the dollar's exploding, what happens if the dollar loses a bid for a day? That's a question I ask myself.
The pound rallies, yeah.
There you go.
I'll try to answer. I think pound dollar, because of the correlation between both central banks, will not see strong movements in any direction. So we got a hawkish statement. So the more vulnerable currencies, the euro is more vulnerable, the Aussie is more vulnerable because both are expected to go into easing. And the Bank of England is waiting for the Fed, as Valeria mentioned beforehand, and that's why if the Fed waits, the BOE waits, and if the Fed goes, the BOE goes. So I think, yeah, more action in euro dollar, Aussie dollar than pound dollar.
Yeah.
Who needs action? Just need pips.
They said that they will decide.
If I want action, I'll go to the racetrack.
Meeting, yeah, they have said something like that. They will decide on a lift off at the next meeting. So that's pretty hawkish too, right? Because they never said something like that, at least not during this month.
They're going to steal Christmas. Janet is going to be the Grinch that stole Christmas.
It will be
They're
huge.
going to tighten. They'll tighten in December.
But do you really think that the Fed will decide to move on in December?
Yeah.
Yeah.
It's possible, and I don't think liquidity is a problem because they announced the paper in December.
You better not shout. Janet's gonna tighten in December this time. Janet Yellen's coming to town.
And Draghi will do easing in December also.
Oh, they're going out together New Year's Eve.
Yeah,
They have a date.
Draghi and
that would be
Draghi and Janet.
and Janet.
for traders.
Yeah, they're
They'll
more
be
or less the
partying
same
too.
age. Yeah.
Huh? Matched.
It's
They met
never
on
late.
Match.com.
Gold gave up all of its daily gains, all of gains made yesterday. $18 to downside and what?
Yeah, I love it.
40 minutes.
We also have an immediate reaction on the probability, implied probability for rate hike in December. I've shown you before it was at 62%. Now it's at 57% for no hike. So
Okay.
still, bond markets don't expect a hike, but it's much closer to 50-50.
Yeah. Yeah.
Oh, getting close, getting there. Euro pound is at a new low. Let's try to put the chart here.
Looking for 70.
Yeah, a lot of British
You know
expats.
it'll be interesting, Yohay, if we get down there. If you look at your weekly chart, it could end up being a right shoulder. And, then next time up through 74.5, it actually measures up to 80. And that would be a dollar bearish environment. So, I'm just waiting for this to develop in euro pound. I don't think you could even think about buying the euro until you think euro pound has turned. Right?
Yeah.
Yeah.
Okay,
You guys
there is
you
a
have lower
question.
numbers? Are you looking for new lows in euro pound? Under 69?
Current levels are really interesting because that was the low early in October and also the high right here in somewhere in September. So now I'm not sure we're seeing confirmation yet of this breakdown in euro pound. In any case, levels below to watch are 70.30, I think. Let's try to draw the line here. And below 70 we have 69.50 as sort of simple support.
Guys, not a minor data. The dollar Swissy is at its highest since March. It has breakthrough to previous monthly highs. So watch that. It's that waiting on the euro also because it keeps going. The dollar Swissy keeps going.
I don't think the Fed's going to be that happy about the reaction on the dollar. Weren't they complaining about dollar strength about 5 months ago? And all the multinationals complaining about currency translation in their earnings? They're in a dilemma.
But they were also complaining about China, and China, well, international developments have disappeared. So I guess they were complaining about stock markets. That's my conclusion.
Well, there is a question in the chat. How deep do you think the euro dollar dip will go? What is the levels to check it out?
108.10 is the really strong support down there, but it's still very far away. So maybe Valeria, Dale, you have other levels to mention?
In what?
Euro dollar?
Euro dollar.
Was the question?
Oh,
how deep?
Our community, Clever had a 108.40 number that he put out there a few days ago as being a buy zone, which lines up with the level that you were talking about, Yohay, 108.10 range or so.
Yeah, I think that was the low. Sorry?
Yeah, I've also heard like 107.60, 107.80 is some kind of fib number. I'm not sure what it represents.
Let's see, maybe.
But I will say, even though the euro's making new lows, the RSI is not confirming it on the 4 hour. We're above 30 on the 4 hour, and on the 1 hour, we're under 30, but not by a ton.
What do you think, Valeria?
Okay, sorry, I lost connection for a second.
You are with us. I think we don't see your chart.
Can you see my charts?
Not really.
Okay, give me a.
Okay.
108.10 was just the low on July 20th, which was the lowest level since.
Hello. Sorry,
Yeah.
I lost connection for a second. I'm here. Can you hear me?
Yes,
Yeah.
Valeria.
Yeah,
Yeah, we
I
can
hear
hear
you.
you.
Sorry, my internet went down for a minute. I have a small disconnection. And I was hearing that the last question was, how far can the euro dollar go today, right? Something like that.
Yes. How this
Yeah,
it could go?
I made a report before the announcement, and I post my levels were 960, and on a break below 960 it was 920, right? So that's the next support. Honestly, I don't believe that the pair can go much lower, given that it already lost 150 pips. But if it does, the next critical support comes around 840. 840 has been a huge static support level ever since April, early April. So that's the level I'm watching if we break through 900. I believe it's a bit too late, maybe not now, to join the party, the selling party, but that's the level. 840. 840 is the key because it has been keeping the attractive bias ever since April, and if we break below it, we can start talking about retesting the year lows around 490.
If Canada gets through these levels right here, I see 133.17 next, and that would not be that'd be a non-confirmation up there.
Okay.
Levels I'm watching on CAD,
We should have more
133.50.
follow through in the dollar. I think that today's guest, Dave Floyd, said if the Dixie got through 97.40, which was a 61.8 fib retrace, that 98.35 would be next in the dollar index. If you guys have that chart, all I have is a delayed Dixie chart.
I got it. I got it. There we are. Wow.
That's it. I have nothing else to say.
Yeah.
But that surprises you guys. See?
I'll talk about for a second about Aussie dollar. We've seen it, as Valeria mentioned, fall over because of inflation numbers. It managed to recover, a very nice small recovery, and then boom, it's falling down under 71 once again, 70.87. It still has a way to go there. 70.40 is the next line I see, and of course the round number of 70. And the most interesting line for me there is the double bottom here at 69.35. Bad news from China, but as long as stock markets in China don't collapse, I guess it matters less for the Fed. So it's sort of everything going against the Aussie at the moment.
Yeah. Val, I don't see your chart.
You
Guys,
can see charts. Give
can
me
you see Valeria's chart?
I can't see.
I'm sharing them now. Can you see them
You
now?
have another user, I think, Valeria. Oh,
You
no,
can
you don't have. Sorry. No, you can't see anything.
Can you now?
No.
No.
Okay. Can you see me?
Anyway, well, yeah, I can see you.
I turned on the camera. Can you see me? Neither that?
Yes.
You can see your face, yeah. The camera's working.
No, let me share the charts. How about now?
No, charts are not working.
No, it's dark.
Okay.
I think the pound is bottom. I think the pound is bottom for now for a rally back to 54.
Sorry, I don't know how to fix that.
You go to the upper left-hand corner for the screen share.
Yeah.
You see that green box there with an arrow? Click it.
Yeah, I did. And I click on my
chart. And then
chart.
it'll show a desktop or it'll show a screen. Click one of those and then start. Maybe that's not working.
That I did. That
Yeah,
seems,
sometimes once you get bumped out of the hangout, it won't work for you again, the tools.
yeah,
That happen.
I do believe it has to do with that small cutting in the internet connection I had.
Yeah.
Sorry,
Yeah, well,
guys.
no problem. No problem at all. There is a question about the Dow Jones. What do you think about the Dow Jones? I know your point on the S&P, but
Yeah.
let's talk about the Dow Jones. What do you think?
Dow Jones?
Yes, about the Dow.
I thought that the Dow would have a shot, and it still could have one. I'm looking around 17,800 is a sell zone, and I didn't add any bearish positions on the S&Ps today. Still think 2,100 might manifest. So those are my levels I'm paying attention to.
So specific in
So
the
another 20 handles in the S&Ps and another 200 points higher in the Dow would be sell zones for me. I already have a piece on if it goes from here. But there are guys making the case that this is just a failing rally in the S&Ps, and shorts have been just cream. And I think that a lot of people remember when we were down there under 1900, I was talking 2050 as a possibility, and 17.2 in the Dow. And just like everything else in this business, when you get new information, you always have to be ready to go with it and see what it's telling you. So we have extensions to the upside, but I still think that doesn't change the bigger picture. And I would say most people who were looking at the S&Ps thought that taking out the August low was a layup. I even heard guys on CNBC saying that's a foregone conclusion. And you don't hear that anymore. So I'd say the long shot thinking is that the lows are in and we're going to go to new highs, the 2,200, 2,400, 2016 levels people were talking about, or by the end of the year. But even if that happens, I think we have to correct this correction. So just trade and don't try and hit home runs. That's what I would say.
I see. Valeria, I know that you talked about the dollar Swiss. There is a question about the top level. What is the top level in your opinion? How far it could go?
Dollar Swissy,
Yes.
at this point, parity. We are 80
Parity.
bits away. Yeah, one. Yeah, I do believe that it's a major level.
Don't
And
worry, there is only
80
eight
pips.
pips. Yeah, 80 pips. And it already broke above the August 11 high. So
Yeah, we are at a level that's not seen since March. So I do believe that parity is the next probable bullish target. And even higher, I do believe that we can retest those highs. That's in early this year around 1.02, right? That's a probable bullish target if we manage to get above the parity level. Sorry, mostly with the euro so depressed.
Yeah, we have the euro depressed, vulnerable against the US dollar, and the Swiss franc trying to weaken the franc against the euro. So we have all the conditions for dollar Swiss to rise. Yeah, parity.
Additionally, the ESNB has been playing its card and doing some intervention in there, although with little success, but they do. So they are welcoming this weakness in the Swiss franc.
and guys, what do you think about commodities? What do you think about the oil and gold?
I don't
Yeah,
understand much, as we were discussing earlier today with Yohay, what favor the crude rally, because U.S. stockpiles again grow, maybe less than market expected, but grow huge anyway. So I don't know, maybe as you had said, some option expire, some position adjustment. I'm not really convinced that this latest rally about $45 a barrel can be sustainable in time. I do believe that crude is still bearish and may resume its decline. And for gold, gold has been trading pretty much on Fed's mood, right? We have seen the commodity rising sharply after they did not lift rates in September. The rally stalled and the gold started consolidation. And right now we are seeing strong bearish momentum because the Fed tiptoed a rate hike in December, right? And at least it increases chances of such happening. So I don't know yet if we can confirm the bearish continuation, but I do believe that we are going to see a bit more of a gold slides ahead.
Okay, thank you. Go ahead, Yohay.
Just want to comment once again about this chart, this new chart I found. The CME Group FedWatch tool. Now the probability for a rate hike in December is up to 46.5%. No hike is down to 53.3. It was 62 before the decision. So I think the bond market is beginning to come around to what economists think, and that we will have a rate hike in December, and that's of course all because of the statement that sort of acknowledged weakness in the US economy, but all in all sees things as steady as improving, as advancing forward. Yeah.
So do you expect no retrace in the, well, according to that, the euro is going down, the dollar is going up because the statement on the hawkish statement from the fund. So do you expect no retrace in the euro dollar now?
Perhaps we'll see the same. Oh, sorry.
Oh, it's okay. Sorry. I mean, it can retrace some. Maybe 110 will be now the level to watch, where probable sellers will try to take it back lower. There's no straight move in the forex market, right? We always have retracements, but still the trend has been confirmed last week when it broke below a daily ascendant trend line, long-term one coming from these lows. Okay, there, and we break it, and that is helping the ECB in weakening the euro.
And what do you think, Dale?
If people look at their weekly euro chart, we broke the up channel that we've been in for a while. And, you know, if you look at the weekly RSI with what I teach, the RSI at the lows in March confirmed the low. So you can't rule out that we're on our way to at least take out that 104 level. And, you know, there are targets all over the place once that happens. The most bullish would be around 102, 102 and a half. But, you know, I actually read some research, and, you know, I do that. Not all of my thoughts are original thinking. Where they're talking about the possibility, I know it sounds crazy, of a 75-cent euro. So, but there are a lot of cases being made for under parity around 97, 92, 88, and the weeklies look pretty ugly to me. How about you guys?
Euro dollar, you mean?
Yeah, the weekly euro chart.
No,
Yeah, I am showing right now. There is a, yeah, you know, we commented before. We are breaking down the trend, the uptrend support. Yeah, it seemed like a 0.810, as Yohay and Valeria commented before. This is the next significant, yeah, level to go. And I don't see any possibility to a big strain right now. Otherwise, we see another kind of, yeah, you know, bad news on development on economics, in global economics. But, you know, right now, the bets are for dollar strain.
All right, well, if you want to, I have my weekly up here, Mauricio, if you want to show it. Shows it breaking down this weekly channel from the lows. You have the same chart up there.
Yeah,
Okay.
but still within its latest range, pretty much.
Yeah.
Since April, we have been trading in between 1.8 and 1.14 right? And there's not much direction in the pair.
Also, if you put an RSI at the bottom of the chart, you'll see that back at the low of 104 or whatever it was. The RSI confirmed the price low. There was no divergence down there. None.
Yeah, none.
So normally markets that confirm price lows don't bottom when they're confirming momentum is confirming price. So this would augur for those lows to give way eventually.
Okay, let's move to the dollar Japanese yen. There is a question here from Masood. He's asking if the dollar yen can touch the 121.20, or it could go back to 120.50. What do you think, Valeria?
Me? As I said earlier, I'm not really sure. Yeah, I'm asking because I know I'm talking too much and I'm interrupting everyone. So anyway, I don't believe it can rally much today because, as I said before, I do believe that it will wait for the Bank of Japan, which is in, I don't know, around 30 hours, right? Early Friday, not in this upcoming Asian session, but in the next. So the market will remain cautious in here. 2130, we may reach that level, but not much more ahead of the Bank of Japan. I'm really not expecting much of a rally in here.
And
I
Yohay,
think exactly
you
the same.
commented? Go ahead, Yohay.
Exactly the same. The yen is a bit limited in its movements because of the expectations from the BOJ. I think, contrary to what I thought last week, I think now there is a better chance that they will move as well, just to join the currency wars. And then we can see it easily break above 120, 150, reach 122. But it's a close call. We should trade after the news, not afterward, not beforehand. So the recent news I've heard from Japan is that advisor Shibayama, I hope I'm not butchering his name, said it would not be strange for the Bank of Japan to ease on Friday. And that's different from comments we heard from the Japanese government just 1 week ago, that they said that it's unlikely. Now they said it's not so strange. So, so I believe there's a better chance of a move also from the BOJ.
I see. Well, there's a good example on how movements are being contained by the BOJ. Is that today's Nikkei, or the Asian session, the Asian market was almost all was going down, but the Nikkei was going up, just because of speculation on Friday's movement.
Yeah, maybe also in Japan the central bank works for the stock market.
Yeah, well. So, guys, thank you for today. I think we can wrap right now. I will ask you for approach, for a summary on what's happening and what will happen, in your opinion, in the next few days or few hours. You first, Yohay?
Well, the Federal Reserve did not take a rate hike in December off the table. It did acknowledge some weakness, but saw a generally positive picture. Markets had expected the Fed to put it off the table because of the weak data, NFP, retail sales, other figures. So that's why we had this positive reaction, especially against the vulnerable euro and the Aussie. I believe we will see, of course, not a one-way street. We might see consolidation, some correction, but at least for euro dollar, I think the direction remains down. And I think also tomorrow we have GDP figures in the United States, and they might be a bit better than expected given this relative hawkishness, but because I believe the Fed has it in front of its eyes. But in any case, I think this gave ammunition to USD bulls until we hear, of course, something else from the same people from the Fed.
Thank you, Yohay. And there is a specific question for you right now. It's about the Reserve National Bank of New Zealand. They have a meeting in 30 seconds. What do you, in 30 minutes, sorry. Do you think they can cut after this Fed hit? What is your approach on that?
If they're now taking the decision, I believe they will decide not to cut because the New Zealand dollar lost support at 67. They want a weaker Kiwi dollar, and they could keep their ammunition dry, their powder dry. Once again, expectations are for no cut, but there's this global currency war. So despite relatively strong New Zealand economy, government surplus, strong housing market, they might decide to cut just to join in the currency wars. If you look at what the Fed did, that would tell the RBNZ, let's wait another month. So if they are deciding now in real time, it's not in 30 minutes. Yeah, it's in 30 minutes or an hour and a half. I think they will decide not to cut. So if they weren't sure about the decision, now they got their hint to wait because of more favorable market conditions.
Thank you, Yohay. Thank you for today. And see you tomorrow, right? In your show.
Morning show every morning, 8 GMT.
Okay, thank you, Yohay. Thank you for everything today. And see you soon. Valeria, what do you?
Yeah.
Can you provide us with your approach?
About what?
Yeah.
Sorry,
What happened? What happened today with the phone statement? Why the euro went down?
Yeah.
What is going on in the next few hours?
Well, I'm still stunned of what's going on with gold. Take a look at the chart, guys. We lost over almost 30 bucks there.
Sorry.
Gold is following the euro in its way down. And honestly, what happened today is that for the first time, the Fed has made sort of a reference about a timing of a lift-off, because they say they will consider it next meeting in December. And that's huge for the market because they have never been so specific, right? Additionally, they dropped the line on international concerns named China. They dropped the line on oil prices, and they acknowledge that employment what has been weak, but they are not concerned about it. So overall, it's really hawkish stance beyond what the market could have expected, right? And the euro is the biggest loser today because it has been already weakened by the ECB last week, right? The ECB does not want a strong euro. They have already warned about the possibility of extending quantitative easing in December. And if you put both in the balance with the ECB extending quantitative easing and the US tightening rates, that means euro going to parity, sort of, right? Sort of speaking. Don't take it literally. Anyway, that's what we are seeing in the market. The euro has lost over 150 pips and keeps going. It's about to challenge the 9 level, and I believe that the bearish trend has been set, and we are going to see much more of the euro weakness over the upcoming weeks. Okay, that's my take. And the other thing to consider right now is don't go too fast to price in dollar strength into the dollar Japanese yen until we have the Bank of Japan meeting on early Friday. That's it.
Okay, thank you. Thank you, Vala. Thank you for coming today. And yeah, see you on Monday, I think, in your weekly show.
No, you're going to see me tomorrow with live coverage of the GDP of the US.
Oh, that's right. I was missing that. Sorry about that. Yeah. See you tomorrow for the GDP live coverage.
Okay.
Okay, Dale. What is your approach on that? What happened today? What will happen? And I know that you are a December believer now.
Yeah, that's something I said before the Fed statement. Call me lucky, but that was exactly what happened. So I really believe that the opportunities that are setting up are, I think we're 2/3 of the way through the decline in euro pound. I want to see what happens down around the 70 level. I'll be interested in seeing what the post BOJ action is like. May attempt shorts above the stops of 2180, and perhaps we get a reversal. Trying to be patient for 2100 in the S&Ps and Canada. The top, I think, was put in. The other caveat being, I talked about that 3120 could be a decent shorting area. But with dollar momentum, I wouldn't rule out that one more push up towards 133.17, because Actually, I think the crude chart is constructive. To me, it looks like an ascending triangle developing. I think the recent break was to shake out people that loved crude. Now everyone hates crude, and it's probably not about supply-demand fundamentals, probably more about geo-risk in the Middle East. So I think that crude is going to make its way up towards $60 going into year-end, possibly early next year. And that's going to take Canada down to 125.
So what do you think about the Kiwi, the New Zealand dollar, just right before the central bank decision?
You know, I don't really take trades in front of central banks, but the way I look at the commodity currencies right now, I have a hard time wanting to do either in Aussie here. I'm leaning more towards that Aussie isn't going to wash out to new lows, and that gold isn't going to collapse and might hold 1140 to 1120. So I'm probably a better buyer on further weakness in the commodity currencies. Hard for me to be bearish Canada, even though there could be one more push up and looking for 125 Canada, and to be bearish Aussie at the same time.
Okay, thank you, Dale. Thank you for coming today.
You're very welcome. It's always a pleasure working with Val, Yohay, and you, Mauricio.
Same here.
Thanks for inviting me.
Yeah, thank you very much. See you tomorrow on the GDP live coverage.
Okay, everyone. Good hunting. Adios.
Yeah.
Adios.
Okay, guys, thank you very
Adios.
much for being with us. Thank you, Dale. Thank you, Valeria, and thank you, Yohay. See you soon. See you. Au revoir.
Okay.
Bye-bye.
Bye-bye. See you tomorrow, guys.
Okay. Thank you, guys. Thank you for joining us in this live coverage. I hope you enjoyed it as much as we did. See you tomorrow. Bye-bye.
Bye-bye.